I'm about to give you all of the answers to take you from where you are now as a day trader to becoming a full-time trader in 2023. And to go even further than that, later in this video, I'm going to show you my exact day trading strategy from start to finish that has helped me make up to $1,000 per day this year. I asked all 80,000 of my Instagram followers the exact same question, and here are the secrets you guys want to know. What's the one thing you needed to remove from your trading to level up? So regardless of what level of trader you are, it doesn't matter if you're a beginner or you're an advanced trader making $1,000 a day, you are going to struggle with one main thing, and that's going to be your emotions. I've had people DM me personally on Instagram saying, Sean, I just lost $20,000, I just lost $50,000 and lost my entire account from trading. How can you help? So here's the thing, there's two main reasons as to why you're losing all of your money every time you trade. Number one is you're over trading, and number two is you're oversizing. So let me explain. Oversizing means that you are using too much money too fast. Usually the reason why people oversize is going to be that you look on Instagram and you see all these influencers making $20,000 a day, $50,000 a day, and the get rich quick mentality sits within you and you want to go and try to make that $20,000. So you end up risking more and putting more money on the line, and then you blow it all. And then over trading is another side of the spectrum. So a lot of times people don't know when to stop trading. They'll take a trade, lose it. They'll take another trade, lose it. And then they try to keep taking trades to make their money back, and they end up losing all of their money by the end of the day. But here's three main solutions that are going to help you with oversizing and overtrading and eventually get you to level up as a trader. Number one is to set a specific amount of time that you're allowed to trade per day. So let's say the market opens at 8:30 in the morning, your time, you want to set a specific amount of time. So I want to stop trading by 11 a.m. That gives you a 2.5 hour window to trade. Then once that 11 o'clock hits, you need to be done for the day, get up and leave. What this allows you to do is it allows you to give yourself a certain amount of time, and then if you don't find anything within that amount of time, well, guess what? Now you don't have to trade at all. Not trading is better than losing, and that's going to be the case 10 times out of 10, right? You'd rather be at zero than be at negative $300,000 on the day. I've looked on TradeZilla and I've noticed that every time I trade past 11 o'clock every single day, I tend to make my biggest mistakes at that point. So what I ended up doing was just cutting it out past 11 o'clock. I'm done, no trades, doesn't matter. I'm fine with not making any money for the day. Number two is limit the amount of losses that you can take each day. One of the main things that you see traders do, and one of the main downfalls that traders have, is going to be when they take losses, they start to snowball and get worse and worse and worse. Your emotions are going to start kicking in, and you're going to start saying, I want to make that money back. So they'll keep taking trades to see if they can make that money back, and by the end of the day, they've lost 30 trades and they've completely wiped their account out. Well, to stop yourself from doing that, set a max number of losses that you can have per day. So for me personally, if I lose 2 times in one day back to back, I'm done. As soon as I take those 2 losses, I'm already thinking, all right, that sucks. I'm down $500, $600 in a day. I need to continue taking trades to get back to that point. Well, why would you do that when you can just limit that completely and then you're done? You've limited your losses. Number 3 is going to be to size lower. So most of the time when beginner traders start out, they end up risking a ridiculous amount of money to start off with. They end up using $10,000, $15,000 on a position and end up losing $2,000, $3,000, $4,000 by the end of the day. And that's only one trading day. As a trader, your main goal is to stay alive. You want to trade as many days as you possibly can. So why would you limit yourself to taking a $10,000 position in one day and losing all of that money when you can limit the amount of money that you're using per trade? So size lower, start using a lower amount of money. If you have anything above a $10,000 account, I recommend that you use 5% or less of your account per trade. That gives you a longer amount of time that you can stay alive and lose trades. Now, if you have a smaller account, you really can't use 1, 2, 3% because that's usually going to be one contract. What you can actually do is use around 10% of your account per trade, and this allows you to at least have 10 trades of losing 100% of that money to stay alive. Once you can do those 3 things consistently, you'll start to realize that your emotions are actually completely gone. You're removing the emotions out of your trading. This will level you up as a trader 100%. One of the most common questions I receive in my DMs is going to be, what trading strategy should I use? Before I give you a full in-depth look at my trading strategy, I'm going to explain one simple thing. All proven trading strategies work. You are not going to find a secret indicator. You're not going to find this MACD RSI crossover that works 100% of the time, right? There is never going to be that. Now, with that being said, I'm about to show you one of my favorite trading strategies that I use every single day, and I'm giving it to you completely for free. So if you like it, go ahead and subscribe. All right, so the first thing you're going to want to do is head over to the daily time frame. So right now we're on SPY and we are going to mark important key areas. So right here at 459.46, we're going to mark this as a key level because it has a massive pivot to another direction, leaving us with a level of resistance. Down here, you can see the same thing at 433. You can see we had a level of support being formed right here. We need to break this for a massive move to another direction. So at the moment, these two areas are the most important key levels for me to determine whether or not we're going to continue on in the downside trend or the upside trend. This strategy is called the order block / supply and demand strategy that I've been using for over a year now, and it has made me a ton of money. So the first thing we need to do is grab our rectangle tool. Now, what we're looking for is a massive move to one direction. You can see here we have big moves. Now on these massive moves, you want to start marking the candle before the massive move to that direction, right? So this green candle right here is the candle right before we have that move to the opposite direction. What's important about this candle is once we have this massive move downwards, there's going to be a lot of people here that did not get a chance to buy to the downside. We had a massive move to the downside. Well, once we come back up and touch this area again, all of those people who didn't get a chance to get in on the first time are going to be able to get back in that second time. So the way that we draw this rectangle is going to be from the bottom of the candle to the top of the wick. If you guys don't know what a wick is, this is the wick. This is going to be the actual body of the candle, and this down here is going to be your wick as well. So for a downside move like this, you're going to use the bottom of the candle, top of the wick. For a big move to the upside, you're going to use the bottom of the wick to the top of the candle. So you can see it's like this. It's the opposite move. So you can see here, we left out the bottom. Here we left out the top. So if this did end up coming up to this area, I would have my stop loss above the order block here, and I would have my target down to the next order block. This lets us have a very clean position without having to guess what's going to happen. Instead, we already know that there are going to be orders left unfilled here. Now, it just depends on the amount of volume we see coming up to that. Obviously, if we end up seeing a massive move to the upside with absolutely no stopping, and it ends up coming all the way up to 448, well, we're not going to render this a valid position. What we want to see is any type of reversal candle over in this area, and then we can end up using that to the downside. Here's an example of that. The one setup that I really liked was this AMD gap fill reject. Once you get back up to this area where there's a ton of orders, this is going to then kick in all the limit orders that people had missed on that trade. So I went ahead and set my demand here, or my supply here, and my demand here. Once we came up to the top here, I actually have my 2-minute and 5-minute up. So on the 2-minute here, I saw us push up into this zone. I didn't take the trade just yet because I wanted to see how we would react on the next few candles. So we got into this zone here. A lot of people would tell you to take it immediately. I didn't. So what I ended up doing actually was I waited for this candle to close first because today had really bad price action. So I waited for the second candle to close. I saw that we closed on this sort of reversal candle, and my next goal was to see what would happen on this next candle. Well, the thing is we pushed up a little bit, could not show any strength to push up above this zone, and then we came down and ended up breaking my zone to the downside. Now this looks like a very clear reversal pattern at this point. So I entered to the downside as soon as we flipped red on this candle. My full exit was right here at this demand zone, and we ended up rocketing right back up. So you could have taken calls right up. So this strategy is very, very powerful. If you take it, make sure to set your stop losses above the zone always. Don't set it inside the zone, because there's always an area to reject inside that zone, right? Like I said, it doesn't matter what strategy you use, but it matters your emotions and how you use those strategies to make yourself a better trader over time. Consistency is going to be key for any strategy. Doesn't matter if you're using supply and demand, support and resistance, trend lines. It doesn't matter what you're using. If you are a consistent trader, you are going to make consistent trading moves, and they will continue bringing you up over time. Next question is, do you have a course where you teach? The answer is yes. I have a program called Simply Options Academy. I've been spending the last year building it and making it the most perfect program that I could possibly ever think of. So at Simply Options Academy, we live trade with you every single day. I have one-on-one personal mentorship where I work with you directly and teach you every single thing I've learned over the last 5 years of trading. Keep in mind, I've spent over $15,000 in courses and mentorships. I teach you one-on-one personally everything I've ever learned in those mentorships and courses, giving you an insane amount of value. We have masterclasses, Q&As, live trading every single day. I track all of your trades with you and develop a strategy that will actually allow you to be profitable. This will allow you to skip the steps of losing thousands and thousands of dollars because you have somebody by your side holding your hand. So if that sounds like something you're interested in, go to simplyoptionsacademy.com. It's in the description below. All right, risk management on a trade. So I'm going to give you a huge piece of advice right now when it comes to trading and risk management. You need to focus on what's called your R multiple. If you don't know what that is, I'm about to show you right now. So one thing that I see a lot of traders doing is they end up targeting an area. Let's say they target this high right here and they set a stop loss below the zone like they're supposed to. This little box right here tells you that you have a 0.97 risk to reward ratio. So what this means right here is that you are risking the exact same amount that you are going to make on every single trade. So if you take a 0.97 risk to reward trade and you lose 50 times out of 100, then you will just be back at break even. Well, the key thing that I'm going to teach you right now is to always keep your risk to reward ratio above 2. Now you are risking $1 to make 2. So if you lose 50 out of 100 trades, well, guess what? Now you're still massively in the green because every trade you lost is half the amount that you've made. So this keeps you in the green no matter what. Now, the larger the R multiple is, let's say right here you have a 6R multiple, a 6.7 to 1 risk to reward ratio. Well, now guess what? You're allowed to lose 5 more trades. You can lose 5 trades and be just fine because the 6th trade is going to make all of your money back. No matter what, I recommend trimming at least 2 to 1 so that way you can keep yourself in the game longer. All of these key things that I've showed you in this video are going to transform you as a trader. We're back on YouTube. Oh God. We're back, YouTube. I'll see you guys later.